All right, today we are diving into a really big one, the massive upcoming IPO from Hero FinCorp. So what's the deal with this multi-crore public offering? Well, let's break it all down.
First things first, let's just look at this number. We're talking about over 3,600 crores. That is the total size of this IPO. It's a huge figure, right? It immediately tells you we're playing in the big leagues here. But what does it actually mean when a company decides to go public and raise this kind of money?
Well, that brings us to the term you're going to hear a lot, IPO, which stands for Initial Public Offering. You can think of it as a company's big debut on the public stage. You know, after years of being a private company, they're basically opening the doors and inviting everyone to buy a piece of the action for the very first time. And yeah, that's the key idea here, the switch from private to public. Up until now, Hero FinCorp was owned by a pretty small group of investors, but by going public, they're creating and selling off tiny pieces of the company, we call those shares, on the stock market. This means pretty much anyone can become a part owner. Okay, so what actually makes up that massive 3,600 crore figure? It's not as simple as the company just pocketing all of that cash. The money is actually coming from two very different places.
You see, the offering is split into two parts. You've got a fresh issue of about 2,100 crores, and then an offer for sale of almost 1,600 crores. Now, the difference between these two is absolutely crucial, because it all comes down to one thing: who gets the money?
And this slide lays it out perfectly. With a fresh issue, the company itself creates brand new shares to sell, and all that cash goes right into the company's bank account to fuel growth, pay off debt, you name it. But with an offer for sale, it's the existing early bird shareholders who are selling their personal shares. In that case, the money goes straight into their pockets, not to the company. Big difference. So now we get how the deal is structured. But that brings us to the million-dollar question, or in this case, the multi-crore question. How is the company actually doing? Is it growing? Is it making money? Let's take a peek at the financials.
When you look at revenue, the story is pretty impressive. The company's total income jumped from roughly 6,400 crores in 2023 to over 8,300 crores in 2024. I mean, that is a serious leap in the amount of money coming through the door in just 1 year. And it's not just about making more sales, right? The company's profits are also climbing fast, going from about 480 crores to over 630 crores in that same time frame. This is a huge sign. It tells you the company isn't just growing, it's managing its business well enough to keep more of that money.
So the numbers look solid, but if you're thinking about investing, who actually gets a chance to buy in? See, IPOs aren't just a free-for-all. The shares are specifically divided up among different kinds of investors. And here's that breakdown. A huge 75% is set aside for what are called qualified institutional buyers, or QIBs. These are the big fish: mutual funds, banks, financial institutions. Another 15% goes to high net worth individuals. That leaves just 10% for retail investors like you and me. This kind of split is pretty standard, honestly. It helps make sure the offering is stable and has large-scale support. Okay, so if you fall into one of those categories and this IPO has caught your eye, there's a very clear schedule you need to be aware of. Let's quickly walk through the key dates. The whole thing kicks off on the IPO open date. That's day 1 for applying for shares. That window shuts a few days later on the close date. After that, on the allotment date, you find out if you actually got any shares. And then the grand finale is the listing date. That's when the shares officially hit the stock market and start trading.
Now, what's really interesting is the conclusion from the source material we analyzed. Looking at all these numbers, it makes a pretty direct statement. It suggests that investors should really be looking at this IPO as a long-term play.
And that really leaves us with the ultimate question, doesn't it? We've seen the data, a company with a clear, strong growth path in both revenue and profit. But is a strong past always the perfect signal for a great long-term investment in the future? Well, that's the question every single potential investor has to figure out for themselves.